Hey everybody, I'm Zach.
And I'm Jesse.
And you're watching In Depth.
On Now You Know.
So have you heard about this, Jesse? Elon's losing it, and he's laying off 3,000 American workers to build a gigafactory in China and Tesla's enormous $1 billion debt.
Wow. I mean, yeah, there's been a lot of headlines recently that are just focusing on this 7% layoff by Tesla.
Elon is pulling out the oldest trick in the executive playbook by laying off 3,000 Tesla workers.
Right.
Tesla tanks after Elon Musk lays out a difficult road ahead.
Right.
Let's pull out the photometer.
Yep.
I think this is about a 7 on the photometer. How about you?
On the photometer?
The photometer.
I don't know. I mean, I've seen some pretty more spectacular, but I'm going to say this is about a 6.
Okay. You know why I'm going with the 7 is because in conjunction with all of these articles about, the cuts of the employees, it's also the Tesla stock, right? So Elon sent out this letter to his employees last Thursday, and it spelled out that he needs to do some cuts to keep profitable, and because they've grown so fast. But what happened on Friday was Tesla's stock price tanked about 12%.
Right.
And we're going to get into why that happened, but a lot of it had to do with FUD.
Right. So let's first of all start with, the horse's mouth. Always a good place to start. Elon's letter to employees. So this was leaked out. He had sent this out to all of his employees. It was obviously leaked out because if you send it to so many employees,
people. Right.
Some is going to come out. We're not going to read through the entire thing.
No, we're just going to paraphrase some sections and read some sections.
But you can definitely read it for yourself.
Yep, we have the link down below. Basically, he talked about the fact that in Q3 of 2018, they had a profit of $312 million, which he said was, just 4% profit. And he called it, a small profit. I mean, it was big for Tesla because it was the biggest profit in 15 years, but it was, by most company standards, a small profit.
True. I mean, we do have to keep in mind that they have just started. They've usually had 1 quarter of profit after every new car, after some point, after they've ramped up production, got through all the kinks. This was pretty darn quick. We saw a lot of losses before this, then we saw some profit. He said that they're expecting a small profit in Q4. So last year, they went through a 30% employee growth. So they added 30% more employees.
Yeah, to ramp up building the Model 3 and delivering the Model 3.
Right. Now they're going to cut 7%. That's about 3,000 employees. And we've done a little bit of number crunching. And as an average, as a loose kind of figure, we're thinking that would be somewhere around $300 million in savings.
Yeah, probably a little less. I mean, we went and checked on Tesla jobs, and many of the engineers get between $92,000 and $108,000. Right. But a lot of these jobs are probably sales jobs, which are less money. So
now, and keep in mind that $300 million is per year.
Right.
So per quarter, it's
$75 million.
$75 million or less. Right.
Right. And so we were just wondering, Jesse and I, what jobs will be getting cut. And I think, the number one we came up with is probably North American delivery people, because as they start moving their sales, ramping up in Europe and China, those American specialists are probably not needed as much.
Right.
Also, we're thinking there's probably a lot of engineers that they had working on specific projects like the Powerwall or the solar roof, and maybe now that they've finished designing most of that, they don't need those engineers, so they probably either move them over to other projects or maybe they're cutting those.
Right. And just as we saw last quarter, where they were able to make some of their line more efficient by removing workers, I think we're going to see that again. I think that we're going to see a loss of line workers.
Oh, so you mean
being replaced.
Building the cars?
Yes.
The S, the
yes.
X, and
so
the
the line workers at Fremont Factory, I think that we're going to see, and probably at Gigafactory as well. I think that those two, you can make better efficiencies. You can actually remove some people from the line, increase your profitability.
And then I think Elon has never been that happy with a lot of their subcontractors and specialists, and support contractors. So I think that they're going to be cutting a lot of those back as well. That's probably how you're going to get to the 3,000 figure.
Right.
Now, Tesla, as we mentioned, traded down over 12% on Friday. Right. I think of that as a great opportunity to buy more stock because I really didn't think you'd see the stock in this range again.
Right.
But what has basically happened is that instead of taking it as a positive thing, the market took it as a negative thing.
Right, which is funny because GM, just a few months ago, laid off 15% of its salaried workers. That's 14,000 people. That's in November. And it had a 5% stock gain.
Right. Now, how does that happen? You're an investor in GM, and you're like, that was great. They fired 15% of their workforce.
And they're shuttering 3 of their North American plants.
I'm so positive on GM.
It's really funny. the investors, it looks like we're going after short-term profits instead of long-term growth. Because, I mean, you can't grow a company if you're shutting down your plants unless you're saying we're retooling them, which they're not saying.
Right.
Tesla, on the other hand, is not shutting down any of their plants. They say that they're going to be producing more cars from this. So I don't exactly see where this flip in logic comes from.
Well, we're going to get to that. Anyway, so in his letter, he said, in Tesla's Q4, preliminary unaudited results indicate that we again made a GAAP profit, but less than Q3. So that means it's higher than zero because it's a profit, but it's going to be less than $312 million.
So I think that's way too close to call.
Yeah.
It's going to be in that range.
Right. So I was surprised by this because in Q4, sales were even higher than in Q3.
Right.
Revenue was higher than Q3.
Right.
So I was kind of expecting maybe a higher profit in Q4.
So I think that a big chunk of this is due to the tax credit going away. It had nothing to do with the tax credit itself necessarily, but more Tesla's response to it. So instead of just saying, we're going to keep doing what we're doing, they were trying to push out as many cars as possible. That meant that they had a lot of people that they hired to work at their delivery centers because, you know, if you're trying to deliver 100 cars a day through one delivery center, you need a lot of people to move cars, do paperwork, talk to the customers. And it was a madhouse at almost every single delivery center.
Okay, but why would Tesla not care about their bottom line? Why would they care more about getting cars out?
So here is, I think, the important thing that a lot of investors miss. And that is, I think what they're doing is they're building a critical mass of Tesla owners. Now, Tesla's never had a critical mass, right? It's always been on this fringe thing. If you saw a Tesla, it was almost like seeing a Maserati or something. You're like, whoa, a Tesla. What they're doing is they're breaking into the market. They're grabbing a whole bunch of market share. And I think that they need to do this cultural shift in people's minds. They need to, instead of associating Tesla with like exotic and unattainable, they need to turn it into Tesla is awesome. I want one.
Can you give me an example of like some other company that had to create a critical mass? Because I'm not exactly understanding.
Sure. So in the earlier days of the internet, it was kind of more Wild West and no one exactly knew what this internet thing was about.
That's true. I remember there was a Christmas like where I first bought stuff on Amazon and everyone in my family, all my friends thought I was crazy.
Right. And now if you go back even further back towards eBay, when PayPal first started to come out. Now, it wasn't always PayPal. It was, of course, X.com before that, back when Elon Musk, surprise, surprise, was one of the creators of it. One of their strategies to get people to use it was to offer money. Basically, set up an account on X.com or PayPal, and we'll give you $50. $50. Here you go. Boom. Just waving it in front of people.
That doesn't make any business sense.
Well, so here's what happens, right? Everyone was concerned with the internet and giving away any personal information. Don't put any pictures of your kids on the internet.
Right.
Now, of course, today, log on to Facebook. But back then, it was the internet. Anyone can see it.
Right.
And paying for things through the internet.
Right.
No one thought that was an okay idea. By waving $50 in front of someone's face, they might go, all right, I'll try it.
Oh, because you're not even risking your money. That's
right.
Their money.
Oh, okay. $50. I'll give it a shot.
Right.
So you sign up, you get the $50, you go on to eBay, and you buy something. It comes to your house, it works, and you go,
that was cool.
Oh, that wasn't so bad.
Yeah.
Oh, this works.
Right.
I now trust it. So now you're going to start buying stuff on eBay, and then when the new X.com user or PayPal user goes over to Zach and we start to have a conversation about it, I'll be like, you'll say something like, oh, where did you get those sunglasses? And I go, oh, I got them from eBay.
But didn't you have to use PayPal to...
I did use PayPal. It was great. It was really cool.
Wasn't it scary? Didn't you have to give them all your information?
No, it wasn't that bad.
Didn't your bank account get hacked and all your money was lost?
Nope, I'm fine. And look at me. I look super cool with my
I think I'm gonna try that.
Right. That's the critical mass thing that we're talking about.
Okay.
It's so that word of mouth. It's that acceptance between, I don't think that that's an okay thing to do, and then suddenly someone you trust, someone you know, has that thing, does that thing, and all of a sudden you go, okay, all right, it's not that bad.
You know, because that's been happening as people have been asking about the Model 3. They've been saying, oh, is that one of those super expensive cars? And you go, well, actually, it's not super expensive anymore. And they go, wait, what? Because they've only learned of it as a luxury brand.
Right. So they're almost changing their brand. This is what Tesla's doing. They're changing their brand, and they're building a critical mass of consumers.
Gotcha.
This is a new thing, right? The Model 3s are outselling the Model S and the Model X combined.
Right.
So you're suddenly having this huge growth in the number of users of your product.
Right.
You know, you might say, okay, that's good. But it's not just that. And we've sort of touched on it before, how people's minds don't tend to get changed until they're in the car.
That's a really good point, because I want to bring up the point about the supercharger network. So many reporters talk about Tesla and all their problems, blah, 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 and you never hear them talking about the supercharger network. And I think that's because until you own the car, you don't understand the value of the network. In fact, you can go for a ride at a showroom and still not understand the supercharging.
Right. And you can go for a drive around town. You could even stop at a supercharger, charge up a little bit, but you don't quite understand it until you go on a trip with multiple supercharging stops.
Until you own the car like a real car, and one weekend you're like, hey, let's go visit my buddy Dave in Vermont. And then you're like, oh, how do we do that? And then you get in the car and you magically can do it.
Right.
Then you go, this is amazing.
Right.
And so that's a whole other part. So then once you've done that trip and then you tell your friends about it, they're like, oh, so there's no problems getting in an electric car? And they're like, well, not this one.
Right.
So that's a really big point here, and I think something that gets lost.
Right. So when people are looking at profitability, let me see the numbers. Let me see the numbers right here. Let me just take a look at those. Let me see your bottom line. Looking at those numbers is useful for some companies, but I don't think Tesla at this point needs to be showing huge profits. No. I don't think that they need to be. What they need to be doing is putting cars in people's driveways.
You bring up a good point, because the media gets to, and the shorts especially, get to define what they want to define as successful.
Right.
So they just say, laying off workers, that's a negative.
Right.
Not having a big enough profit, that's a negative. But that's not that's the wrong definitions.
Right.
They don't know even how to define this company, and they don't want to define it that way.
And also the goal of Tesla is not to make money. The stated goal is to accelerate the adoption of sustainable future, basically. Right. And a big part of that is electric cars. I would argue without Tesla, and they ignore this in every article, without Tesla, we would not see a Jaguar I-Pace. We would not see an Audi e-tron. We would not see the Porsche Taycan. We wouldn't see any of these vehicles. We would not hear about them. The Leaf would still look like the old Leaf. It would still have the same range. Mm-hmm. It would be sold to hippies and people who really, really care about the environment, and that would be it. That would be all you could do. That would be the best you could do. You drive around with your little 92-mile and a good day range, and that would be it.
Yeah. Well, let's get back to his letter. So he said, this quarter, as with quarter 3, shipment of higher-priced Model 3 variants, this time to Europe and Asia, will hopefully allow us, with great difficulty, effort, and some luck, to target a tiny profit. So that brings up the question. Mm-hmm. Why a profit at all? I mean, many companies like Amazon were unprofitable for years and years as they built their business.
Right. I think part of it is because Elon has claimed that he wants to be profitable moving forward. But then that, again, begs the question, why?
Right.
And I think that's to keep Wall Street happy. Because basically, if an analyst can look at the company and say, oh, they're not profitable, that's typically, oh, they're not profitable? I guess that's a bad thing, right? For many companies, being profitable means success. There are not many companies like Amazon that have had the growth that they have had.
Right.
You know, have come in, disrupted a bunch of industries, blew past all their competitors in terms of market share. Amazon is a really good example when we're comparing Tesla, and we've mentioned this before, but basically they were unprofitable for quite a long time.
Yep.
Their stock price was low. Analysts were saying they're not profitable. This company doesn't make any sense if they're not making a profit. The thing was, they could have turned on the profit spigot at any time.
Right.
And if Elon wanted to, he could say, okay, we're going to fire all of our research and development engineers.
Yep.
We're going to fire absolutely everyone on the line that is not critical. Mm-hmm. We're going to make a certain number of Model 3s every year, a certain number of Model S's every year, and we're going to turn big profits because Model S, Model X both make huge profit margins.
Yep.
The Model 3, if they were to just sell, say, the performance Model 3, just cement themselves as a luxury brand.
Right, they could be just Jaguar, basically.
Right.
Right.
But they're not doing that. They're going down the ladder
to fit their mission.
To go down into the $35,000 range. Exactly. It's a tough it's a tough market to get into, but they're breaking into it, and that's why they're not profitable.
But going back to your Wall Street comment, I believe that Elon wants to break the shorts. And this is the weirdest group of shorts I've ever seen. And that is because it is not the normal shorts, okay? Tesla is still one of the most shorted stocks. Over 20% of the stock is shorted.
So let's just talk about a normal short, for instance.
A normal short is a bunch of investors who truly believe that this company is overvalued and that that's going to, in a few months, everyone will see that that's true because, the numbers will come out kind of thing, right? That it's basically just being hidden by a bunch of like great marketing or a bunch of like lies or people just believing for whatever reason, but it can't stay that way forever, right? Too good to be true. This company has been shorted basically since the beginning. And they're still making their same arguments, those shorts. And there's no way they could have lasted. You can't, as an investor, last. I mean, we already talked about Greenlight Capital that went down 68% last year. You can't keep running your fund on, let's short Tesla.
Because it's not a successful short position.
Right.
A short position should be short term.
It should make you money.
It should make you money. It should make you incredibly rich. You're expecting a company to crash because you know something. You've done a lot of research into a particular company, and you see, their product is, they're going to run out of supply, or they're going to, their contractor's going to drop out. I know this.
Right.
I've done my research. And I've somehow avoided insider trading, and I'm going to short the company, and I'm going to make a huge amount of money because basically you're selling the stock and then you buy it at a much lower price.
And let's talk about what happened with this bad news the other day. When Elon announced on Thursday that he's cutting 7%, all these shorts waited for that moment and they started selling. In fact, 1 million shares of Tesla were sold. That drove the stock price down. That got other normal investors like you and I to go, oh my gosh, and sell. We had a lot of our people on our forum saying, I profited that day because I bought lower, so I sold that day. So it drove the stock price down and created a new story. The new story is no longer... See, we wouldn't even be doing this in depth right now if it was just that Elon had to fire some people, because that happens with every company.
Right.
Not that exciting. What made it an exciting story was that he cut some workforce
and then the stock tanked.
And it tanked by a lot.
Right. And that tank, it doesn't need to be big to start out with. But basically, as soon as the news media catches up and they bring up the stock ticker chart and it's red and the line is going down, people panic and they go, oh no, I need to sell my stock quickly before it goes out of business. They do that. And then the stock goes down even further, and you get this snowballing story.
Right, because let's go back in time to June of 2018.
Right. Oh, those heady days back then.
So June of 2018... they're having trouble ramping up the Model 3. There's all sorts of FUD going on. It was a crazy summer.
Right.
And Elon announces a 9% cut in the workforce.
Right. They were firing more people. Now, keep in mind, they did this 9% cut, and yet throughout the entire year, they increased numbers by 30%.
Right.
Take this cut, this 7% cut, with a grain of salt. They're still a growing company.
Right.
I think what they're doing is they're cutting the chaff.
Yeah.
They're finding the people who aren't as effective, and they're getting rid of them.
Yeah. And they're probably going to be hiring back plenty of people in the next year.
Right.
So, I mean, this is what we see with Tesla. Cutbacks, hiring. Cutbacks, hiring. Now, this point may have gotten lost. I want you to listen for the word may. However, starting around May, we will need to deliver at least the mid-range Model 3 variant in all markets, as we need to reach more customers who can afford our vehicles. Moreover, we need to continue making progress towards lower price variants of Model 3. So we just got another cool little hint in this, which is that Europe and China will be hopefully getting the lower priced Model 3s, the lemur, if you will.
Yeah, the mid-range Model 3.
In May.
Which is very exciting for
Very exciting.
anyone living in Europe or China.
Now, Elon went on to say, we unfortunately have no choice but to reduce full-time employee headcount by approximately 7%. We grew by 30% last year, which is more than we can support, and retain only the most critical temps and contractors. Now, why does he have to do this right now? He has to stay profitable, right? So you can't just keep hiring people that aren't making you profitable. They have $920 million in bonds, which are coming due in March. That's what's been in a lot of the headlines. $920 million coming due.
Right.
Don't forget what they got in the bank, folks. Over $2.7 billion in cash sitting in the bank.
Right.
So paying off these bonds is not a big deal.
Right. It is a blow to their cash pool, but they are by no means in huge financial trouble with this, especially if they're profitable.
Right. And the fact that paying off these bonds just shows the market that, hey, we got a great return on those bonds. And if they ever want to offer bonds again, sign us up.
Exactly.
Which they may be doing. I want to talk about why Elon chooses his times to talk about bad news. He chose this window, I think, because it's a good time to give bad news if you're trying to keep the Model 3 price down. Why is this? Well, there's a lot of potential buyers out there who are waiting for this lower price Model 3. Right. And if you hear that he's has to cut some workforce and he has to cut the referral program and get rid of those free roadsters because you're trying to get the Model 3 cheaper, then you're like, thank you, Elon.
Right.
You're trying to help me get into a car, which he is.
He is. I mean, they absolutely didn't need to lower the price of the Model 3 by $2,000 after the tax credit went away, which they did. They did that.
Right.
They didn't have to offer people who, through a bad stroke of luck, got their delivery after December 31st when they had ordered before a specific date. Those people, they actually fronted the money. They said, oh my gosh, we didn't make your delivery date. Here is what we owe you in what you would have saved in taxes. From a business standpoint, that's a bad idea. You don't do that. Don't do that. But from a kind of a longer term thinking business scenario, again, you're building loyalty by doing that.
Exactly. Brand loyalty, you can't put a price on that, but yet American companies continually forget about that.
So, it's all about margin right now. Elon is trying to kind of thread this needle between being able to sell a lower price car and being able to make a margin on that car. Right. Because if he can make a margin, then he can make a profit. And if he can make a profit, then Wall Street stays happy, all of the investors stay happy, and that's working towards a better...
What he's ultimately trying to do here is break the shorts, and he will break the shorts, because what happens is you can't go quarter after quarter after quarter of profit and keep the price of the stock in this range.
Right.
It's got to bust out. And when it busts out to, let's say, $500 or $600 a share, what happens then? There's no way that you're going to be able to get this kind of negative FUD to take hold again and stick.
Absolutely.
Because once you hit a new plateau, the rest of the market comes and goes, oh my gosh, what you're at $600 a share? Sign me up. Tesla's taking off.
And I can understand because most typical companies are not threading needles, right? They're either drilling for oil or they're Facebook and they're just doing profoundly well. Threading the needle is usually a bad thing. But Tesla has been threading the needle since they began.
Right.
It's always been this life and death battle. And right now, they're in the best position they've ever been in.
It's so true.
They're profitable.
Yep.
They are about to enter the European and Chinese markets.
Do you realize what we're talking about?
Right.
These are huge markets.
Humongous markets.
And all the people in these markets, they're not like, oh, who's Tesla?
Right.
What?
They're dying. They're waiting for it. Revenue is at a record high. Car sales are at a record high. I would argue that they have one of the most wildly successful cars in the world. It's one of the best cars in the world. It's not like they're trying to push out a Nissan Leaf level of car, right? This has way better specs. It has better thermal management. It has its supercharging network. It's a serious buy. You can actually seriously live with this car. There aren't that many concessions you have to make as a buyer of this car. And most importantly, and something that, again, people do not see, is that they're building a critical mass of users, a critical mass of people who, to them, driving an electric car is normal. This is not something that we've seen since the turn of the century.
I think that's so true. People watching the show, especially, we're in our own little world where we understand something that basically the bigger world doesn't understand yet.
Right.
So we kind of get it, and we're like, why is this so special?
We take it for granted.
Yeah, but go talk to your friends, and you know what I'm saying is true. You talk to them about Tesla, and most of them, unless it's your neighbor who hears you talking about it every day, they're like, what is Tesla again?
Right.
That's what we're dealing with.
Right.
So as soon as we get over this critical mass and this hump, you're just going to see everyone talking about it as if they always knew about it.
It's going to be the same thing as smartphones, HD TV, and PayPal.
That's right.
It's going to be something that at one point was, I don't know about that. And then now everyone's like, yeah, absolutely.
That's how it works.
That's how it works. So thank you so much for joining us on this episode of In Depth. We hope you enjoyed it. We do this every single week. We're always trying to find topics of like, what are we going to get in depth about? This week it was this, kind of a counter FUD episode looking at all the ridiculous headlines and news stories that were coming out about this that ignore entire parts of Tesla as a company. And we're just glad that you were here to listen to us and to stick with it. We hope that you like this video. It helps in the YouTube algorithm. So if you think someone else should see this who might be interested, hit that like button. Subscribe if you haven't. I know that you might watch our videos consistently. Hitting the subscribe button lets us do a little bit more. We are actually able to get out there and tell people like, we have this many subscribers, and they go, whoa, you have that many subscribers? Oh, that's interesting. Well, I will do whatever thing it is. Oh,
interviews.
Yeah, you want to interview with the CEO of our company? Oh, of course. He would love to talk to you about our new solar product.
Yeah, I mean, we can get you information because we're getting big enough now that not only do we have a newsroom full of people around the world, but we have a little bit of clout. So when we reach out to companies, they talk to us.
Right. And lastly, please consider supporting us on Patreon. At the $1 level, you get Patreon bonus stories every single week. And at the $3 level, you get access to our Discord of amazing, wonderful Patreon people.
Lots of cool conversations.
Super, really interesting, and we're just having a blast over there on Discord, so we hope you head over there and join us. Thank you so much for watching. Now you know.